Hi there, traders. Now, I just want to give you a heads up on what I see is a very good opportunity coming up today. Now, dollar yen, right? It's not very often I talk about dollar yen as a great trading opportunity, but we do have a key long-term trend line in play, and we've got some fundamental things happening. Now, if you were sort of part of the market, the carry trade, right? It's been in play for like at least a year, year and a half. Dollar yen, or the yen has fallen considerably against all major currency pairs. Now, looking at the dollar, right? The carry trade, well, it's losing its shine. Why? Fundamentally, we have seen the Bank of Japan hike rates, right? First time in 35 years, right? We've seen the Fed come out this week, talk about their interest rate cutting cycle will start in September. And the market has factored that in. The Fed, they haven't really exactly said that, but that's what the market knows and that's what's expected. On top of that, with everything else that's going on around global growth, the geopolitical issues in the Middle East, there is a push to the safe havens, right? So you're like, wow, okay, so we've got the safe haven trade. We've also got the fundamental interest rate differential change from the BOJ, and we're going to get another kick from the Fed. This is going down. Now, we have a key level here, and you're thinking, well, what we need is something to give it a push, and that's what the non-farm payrolls can do for us. We get weak non-farm payrolls and the unemployment rate. We need both of these things ideally to come out weak. So below or close to 70K, definitely below the 175K expected. If we get an unemployment rate of 4.1, but ideally above 4.2, the dollar's going to crap out. Okay, so we've got so many things working for this trade, right? The rush to the safe havens, the BOJ hiking, the Fed cutting. We've got an entry level. Now comes the hard part. You've got to get into the trade. Now, this level here comes in at 148.70. Now, I would be looking to get into the trade here around 148, sort of in the 50s, 57, right? Would be a nice entry level. Give it some time to move down. It really depends, right, where the dollar yen is before the release, right? If it's 60 points or 70 points above the trend line, that makes the trade much easier. If dollar yen is back down close to this trend line at the time of the release, well, you're going to have huge volatility as liquidity gets pulled out of the market and you can get caught up in the trade. But if it's 70 points above, what will happen is it will cruise to the downside. It'll hit the liquidity at the trend line. It'll sort of jump around there and then crash through. That's our ideal level. So what I would be doing, because of the general liquidity issues and risk around the non-farm payrolls, is reduce your trade size to a third of your normal trade size. Give yourself a stop loss 3 times the size. Then you can confidently get into the trade if it breaks down through the trend line, only if we get the weak data and only if we get weak payrolls and unemployment rate. Your stop loss is going to be up here somewhere, right? And you take profit down towards 144, right? You're looking at a good 300-point trade on the downside. All we need is weak non-farm payrolls, unemployment rate, and we've got the fundamentals working for us. The safe haven, the Fed, everything's pushing this thing down. We just need the penny to drop, and it could be the non-farm payrolls. Check it out. It's worth a look. Good luck and happy trading.